Thanks and good evening, ladies and gentlemen. And thanks once again for being able to talk to you about Sentula Mining Limited. I think unlike many of the previous speakers, we're a service provider to the mining industry. We're the guys that you contract to do your drilling, exploration drilling up front, and then once the project's feasible, then you bring us in to do the mining and then hopefully ultimately the rehabilitation. We've got a long history in this game, having started out from fairly humble beginnings over 40 years ago, mainly in the civil industry, and then branched into bulk earth moving in the coal sector. The real sort of growth in this business came in the mid-2000s when we diversified quite extensively and acquired several businesses, and those are the businesses which really make up Sentula today. We also went into coal mining, but have subsequently divested out of that and focused on really our knitting, which is providing mining services. From a strategic point of view, we've had a fairly long history of operating across the continent, even though today we've consolidated our exploration businesses quite significantly. But we've paid big school fees, and that allows us to be quite confident when entering into foreign markets as well as continuing to operate locally. And our name is derived from the Zulu word, which really describes what we do. We move the earth or throw sand in the air. From a structural point of view, really have South African operations and offshore operations, which now are limited to Mozambique and Botswana. And then, as was mentioned, we also have a 60% stake in an operating anthracite mine. Safety plays a huge role in our business because we supply services to mining companies, and from that point of view we believe we have an exemplary safety record. We also comply to the DTI codes and also the mining codes in terms of our empowerment. Just a snapshot of the recent interim results, which is the period 30 September 2014. Quite a drop off in revenue, and I think that's reflective of the sector that we operate in. We've managed to stabilize the loss per share on both basic and headline earnings, and I think it's just worth saying that in the last period up to September last year, we also spent significant amounts of money restructuring and repositioning the business. So, the trend is certainly in the right direction. Net asset value per share 164 cents, and I think that's reflective of where the investment case is. Share price currently 25 cents. If we look at the revenue analysis, it is starting to move from pure open cast mining into some of our other services, and that's obviously strategic because we see there's better margins in some of the other services that we provide. We are significantly exposed to the coal industry, which up till recently has been quite a hedge for us, I believe. And if we look at the last survey that was done, the biggest concern is obviously Eskom's performance, but one thing's for sure, they're going to have to still burn a lot of coal, and we're in there to mine it. So if we look at how the business is made up, we really have three core sectors that we operate in. One is open cast mining, and in open cast mining we have two businesses focusing on the actual mining, and a third business which does production drilling in support of those businesses, as well as third parties. Benicon is our largest, really one client, Anglo Coal, focused on coal mining, but we're quite lucky at the present time because their capacity is fully utilized and they have a good 3-year visibility of contracts at the current time. Done a lot of restructuring to continue to keep that business efficient and relevant in the current environment. CCT, a similar business, a lot smaller, and focused on chrome ore mining for Samancor down in the Steelport area. There are operating synergies between the two, but that business is on a sound footing as well and also has reasonable visibility of chrome mining in that particular region. And Jeff, as I mentioned, is the production drilling business that supports both Benicon, CCT, and to a large degree third-party clients as well. It has a very nice diversified production base, client base. But at the same time, I think it's important to say that all these businesses are fully contracted, the assets are fully utilized at the current time. Exploration, we used to have a large footprint across Africa. It's something that we've consolidated as exploration has come off across the continent. But we have solid businesses in South Africa, Mozambique and Botswana. again spent quite a lot of money in that interim period restructuring this business and actually cleaning up the operations in some of the foreign entities. What I think is good about the exploration side of the business, quite a nice diversity of mineral groups: coal, gold, platinum, copper, and manganese. And generally, while 2 or 3 of them are down, at least one of them is in the pound seats. And then probably the solid business within our portfolio is a mobile crane business situated in the Witbank Middelburg area, grown very nicely over the last 5 years. Has supply contracts with really all the major mining houses and Eskom in the area, and it's a business that we see a lot of opportunity to grow in the short term. As was mentioned, we still have a residual stake in an operating coal asset, the Nkomati anthracite mine. We, through Sentula, own 60%. It is an asset that we've attempted to sell in the recent past, and it's an asset that management is still committed to disposing of its stake. However, we've kept it on care and maintenance, and the decision was taken late last year to reduce the costs associated with that by bringing the mine back into production. Subsequent to that decision, we secured an offtake agreement with Glencore Alloys to purchase all the anthracite produced, and we've recommenced mining operations with first sales in the next day or so. Recent announcement that we put out last Friday was the conclusion of the Bankfontein disposal, a mining right out near Ermelo in Mpumalanga, where we hold a 74% stake. We've collected a substantial deposit on that, and final payment is due at the end of February. So from a strategic point of view, as I mentioned earlier, we've paid the school fees. We are diversified. We believe we're well positioned to take advantage of the sort of growth that the mining industry will see in time when the cycle starts to turn up again. And because of the diversification of service provision that we have, we've got enough sort of a backstop to ensure that we can sustain our businesses until then. But at the same time, we do have the African experience. We certainly made mistakes, and out of those learnings, we're quite happy to go back to most of the jurisdictions that we have operated in. So from an investment point of view, we have 5 operating mining services businesses. They all have solid bases of contract work in the current environment, which I think certainly sets us apart from many of our competitors. We do have the empowerment side sorted out, and that's both in terms of the DTI and mining codes. And I think it helps us to maintain our existing contracts as well as comfortably look for new projects within South Africa. We have, over really the last 5 years, managed to reduce our debt to very low levels. And while gearing is imperative in a business of this nature, I think in the current environment, it's a great place to be without the huge sword hanging over one's neck. And we still have the Nkomati asset, which will be sold in the foreseeable future, and I think that will just be a bonus on top and unlock value within the group as a whole. So as our name says, we remain bullish about the future. Thank you.